Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Microport Neuroscientific Corporation Annual Report. Microport Neuroscientific Corporation offers a wide range of neurointerventional medical devices to treat various neurological conditions. The company's product portfolio includes coil embolization systems such as Neumann, Neumann FR, and Neumann lighting, which are used for treating aneurysms and arteriovenous malformations. The company also provides flow-diverting stents like Tubridge and Tubridge Plus, intracranial stent graft systems, including WILLIS, and embolization assist devices such as Cominsci. Additionally, Microport Neuroscientific Corporation offers liquid embolic agents for cerebral arteriovenous malformations. The company's products also cater to the treatment of carotid artery stenosis with its carotid stent system, SafeSir embolic protection device, and Pathfinder carotid balloon dilation catheter. Furthermore, Microport Neuroscientific Corporation provides thrombectomy devices such as NeuroHawk, Tigertriever revascularization device, WaveTrack intracranial aspiration catheter, Extract intracranial distal access catheter, and NeuroGuard neurovascular balloon guide catheter for acute ischemic stroke. The company also offers microcatheters, guidewires, delivery catheters, and filter extension tubes for single use. These products are designed to provide effective treatment options for various neurological conditions, making Microport Neuroscientific Corporation a leading player in the neurointerventional medical devices market. Microport Neuroscientific Corporation maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Microport Neuroscientific Corporation trades at a higher price-to-earnings ratio of 30 times and a higher price-to-book ratio of 2.98 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 16% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth for a company can be attributed to several key factors. Overseas business has been a significant contributor to revenue growth, with a plus 39.4% increase in sales revenue across various regions. The commercialization of core products overseas and the development and approval of first-of-its-kind and one-of-a-kind products have also played a crucial role in driving revenue growth. The company's product line has expanded significantly, with the launch of new products such as AIS Advanced Stent Retriever combined with aspiration technology and AIS Fast Forced Arterial Suction Thrombectomy. The successful implementation of direct sales models in various markets, including South Korea, UK, and North America, has also contributed to revenue growth. In addition, the company's strong growth momentum in international business, particularly in Asia-Pacific, Europe, Middle East and Africa, EMEA, North America and Latin America, has driven revenue growth. The expansion of market coverage in Asia-Pacific and the favorable feedback and increasing market acceptance of NeuroHawk and Extract catheter in Latin America have also contributed to revenue growth. On the other hand, the primary drivers of revenue decline can be attributed to the VBP impact on flow-diverting stent revenue. The decrease in sales revenue due to VBP impact has resulted in a revenue decline by RMB 2012. The net income of the company underwent significant fluctuations over the period under review. Initially, it increased by 6% on page 5, followed by a substantial rise of 39.4% on page 8. However, this upward trend was short-lived, as the net income declined by 26% on page 27 and further decreased by 16.1% on page 35. The profit margins also experienced changes during this period. The gross profit margin increased in some instances, rising by 0.5 percentage points to 73.5% on page 5 and again from 73% to 73.5% on page 51. However, the operating profit margin and net profit margin declined. On page 27, the operating profit margin decreased from 43% to 39.6%, while the net profit margin dropped from 32.7% to 24.3%. These changes in profit margins suggest that the company's ability to convert sales into profits was affected during this period. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided summary, it is explicitly stated that the company generated positive operating cash flow. This is further supported by a net cash inflow from operating activities of Rm 102 million. As a result, it can be concluded that the company is indeed generating positive operating cash flow. Management is optimistic about the company's future prospects, outlining several key strategies to drive growth. The primary focus is on expanding the product portfolio through research and development, which will enable the company to innovate and improve its offerings. This expansion will be achieved through a combination of product launches and strategic partnerships, with the goal of making products more universal and affordable. In addition to product expansion, management aims to enhance innovation capabilities and operating efficiency, which will help reduce costs and increase returns for shareholders. The company also plans to maintain an optimal capital structure, ensuring that it has sufficient resources to invest in growth initiatives while minimizing financial risks. Overall, the management strategy is centered around driving innovation, improving operational efficiency, and expanding globally to achieve long-term success. The company has demonstrated a commitment to returning value to its shareholders through various means. In terms of dividend payments, the company declared dividends for both the current year and after the year end. Specifically, interim dividends were declared during the year totaling £26,153, while final dividends declared after the year end amounted to £47,181. In addition to paying out dividends, the company has also engaged in share buybacks. Notably, in 2024, the company repurchased shares under its share award scheme for a total of £112,391. This indicates that the company is actively managing its capital structure and seeking to optimize shareholder value through strategic share repurchases. That concludes the financial summary for Microport Neuroscientific Corporation. Feel free to comment below, and I will be happy to answer them when possible.